Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry I'm a little bit late, but I wanted to have a good breakfast, so had a good breakfast. Market is already moving a little bit, at least here in the treasury markets. We're here on the downside and we're touching almost 3.6 now. So yields normalizing again, I guess. Let's come over to the charts and just take a quick look at what's going on here. Looks like I got a rollover. Come on. There we go. So you can see here, there was a little bit of a rise overnight, but then it's coming back real quick. So only a slight increase over yesterday, but some pretty strong trend developing. S&P 500 overnight looking really strong. Well, they still got a ways to go. I mean, we gotta get above like 4,100 before we're kind of outside of the zone that they've been trading in, but we'll see. Oil looking good. Gold and silver kind of flat. Copper looking good. Copper really gives me strong signals there. And Bitcoin on the run as well, with the dollar still low below 102. So we do have, let's see here, pending home sales is, so not a whole lot of news today. We may be getting some bond issuance that kind of got highlighted to me yesterday by Zero Hedge. At least there had been 2 days ago. There wasn't very much yesterday. There might be more because it's a Wednesday, which would be a sell. Overall, I think I would have to be biased to the downside with it already moving down, right? And I don't know. I'm still worried about another bout of volatility, but I don't know. Maybe it's been 3 days. Maybe it's over. I don't know. Let me blow my nose. Man, that was so weird. I blew my nose really good, and I thought I had everything cleared out of my system before I started the stream. But what I just blew was so disgusting. All right, 1582 at 13.5. So pretty healthy volume. I pretty healthy liquidity today. We are getting some pushback against this trend. It's being absorbed, but there's an iceberg at 13.5, in fact. Morning, Uzi. I want to come back here. I just want to be sure there wasn't a headline I missed sometime around 6:13. It's about 20 minutes ago. Wasn't a whole lot going on. Anna Steffa, welcome here bright and early. Good job. The only major piece of news I see here is billions in signature bank debt is to be sold by Newmark. How do icebergs show up in Jigsaw? Okay, so there is somewhere where you can create an iceberg alert. Sorry if I can. Pretty sure it's in here. Oh, maybe it is on the I'm thinking about something else. So when I say that there's an iceberg, what I mean is like, okay, there's 1,600 being offered at each price, right? But it took 3,000 to clear them at 13.5, right? So that's why it's an iceberg. What you will tend to see as it's happening is like you'll see the volume going into it and the offer doesn't change. Because what happens is as soon as those orders are filled, they immediately reload and add more to it. So you're just seeing absorption against the market orders, right? But there's synthetic icebergs and there's actual exchange icebergs. So if it's an exchange iceberg, you literally, the offer won't change, like hardly at all. If it's a synthetic one, then you might see it kind of like go up and down really fast. You'll see the amount on the bid change really fast because basically as soon as they see the market orders, they're submitting more limit orders there as a synthetic iceberg. You can see though, once they broke above that 13.5, a little bit of a, you know, usually what happens is if there's an iceberg and they break through it, there's a tiny little run that's usually good for like 2 ticks. So that is the sort of thing that can lead to a reversal. Is I guess the thing that we'd have to be aware of right now. I'm still favorable to the downside today. So that could possibly give us a good entry. Elon Musk and other AI bigwigs call for pause in technology's development. Wall Street Journal. Yeah, and Steffa has a video of one. That might be hard to show. Unfortunately, with the way that it is, I'd have to download it and everything. I think she understands. and you know what? Is seeing an iceberg this early is a good indication that we might see a lot more today. I mean, the liquidity is a lot higher today. Looks like there's going to be some activity, although it may be kind of constraining activity. Technically, if you get heavy absorption, you're getting icebergs. No, he sent it to me on Discord. Yeah. So let me go from the start because I do have a video where we mention icebergs, right? Okay, but an iceberg, the technical term for an iceberg is a refreshing order. So it is a limit order that is not showing the full size of the order on the bidder offer. And when some of that order gets filled, it adds more to the bidder offer, adds more limit orders on. That's a refreshing order. And there is a feature on the CME exchange that allows you to set an order as refreshing. So you could say, I have 10,000 contracts to sell, but only show 500 at a time. And then when 500 get fills, it immediately puts out another 500, right? So that there's always 500 out there until you're filled. And the way that you see it in Jigsaw is you will see a large number traded there in the market orders column. You'll say, oh, there's only like 16. The largest order we have out here is 1,600, 3,000, I guess, on the bid side. But they just traded 3,000. Iceberg. Yep. And if you have another way that this shows up is if you are using the okay, so there they're going. They just busted through a big order there too at 12. Okay, so on that one, I was not so interested in going short there because we were so close to 3.6. I have to say that they pushed through that pretty aggressively. It kind of looks to me like there was some absorption there and everything. And so whoever was selling was just like, oh, okay, I guess I can just sell through this because the liquidity is there. So they went for it. They're a pretty strong downtrend. I guess we could have gotten involved at like 3.595. Yeah, that was very aggressive. I mean, I wanted to be long rates, but I think I missed the bus. And I really don't like trying to chase after a flush of volume like that. They might continue a little bit further though. Like, I'm surprised I'm seeing 3.61 so quickly. So there was a big order at 0.1/2, correct? Now there's a big order at 0.8/2. How many contracts was that? That was a lot. It was like 12 to 15,000. So I think that this probably speaks well to what we might see in the S&P 500. On Thursday or Friday, I was like, short 39.50. I'd say that one was a bust. Here this morning, I'm thinking long 40.35. Okay, so I'm getting a Bitcoin headline here. I don't know if this is considered new. Binance China connection bombshell. Financial Times reports exposes secret ties. Internal company documents indicate Binance hid significant links to China for years, contrary to claims that it left China after the 2017 crackdown. Yeah, man, that was such a strong move. I'm a little disappointed that I missed out on that. I don't know. I guess in this situation, I was saying short order flows were going to be short, but I was not predicting that the order flows would be that strong and aggressive. So now I'm kind of coming back here like, what's going on? actually a decent amount trading there on both sides at 08 and 08 half. The seller's definitely stronger though, jeez. These ones are hard because they either keep going and you just miss out. Like maybe when you get a trend like this, I'd say maybe 30% of the time it just keeps going and it's like it never gives you a break and you're like, oh man, I could have sold it at any point down here and it would have been fine. But then like the other 70% of the time, I'm gonna guess, as soon as you get excited and you think, oh, it's just going to keep going and I need to sell it, it will flip back in your face. I have to say, that was extremely aggressive behavior. And while there was kind of like a pull between like that 11 area, where was it exactly? Yeah, from, well, let's say from 13. There was a little bit of a pull from that 13 to that 10 where they just slipped through. But here in this 09 to 08 area, the buyers have been there. So that's really curious to me. Definitely likely to form a liquidity hole. In fact, I'm not so sure. We're really likely to form a liquidity hole in this area, but I'm not quite getting signs of that yet. Well, that was a pretty strong few upticks there. Let's see here. I'm just kind of going back through my Twitter history. Steve Leishman, it only now occurs to me, given how fast money can leave a bank these days electronically, that bank lines in the old days during a run was a form of liquidity management. Money could only leave so fast. Now those folks could move their money on their phones. Yeah. We really got to think about this whole bank run thing, because I mean, this is the first modern bank run that we've ever had, and I don't think that the average person realizes how bad it was, because it was, I mean, yeah, one bank went down, but like all the regional banks lost money. It was so much money that moved. It was like a real bank run. And a real problem for these regional banks. That's pretty thick. 10. Man, you're looking back on that move, it was particularly aggressive, let's say. Particularly aggressive in the short end of the curve. And yet, I would say that the yield curve is flattening. Just a tweet from Scott Skirm saying there is a race for the exit to get paper funded by 6:30, so institutions might have to sell securities quickly. Talking about today? Oh, 6:30 your time. Yeah. Still, I'm wondering why, what that's about. Let's go look. I thought that name seems familiar. Do I have them? Executive Vice President in Fixed Income and Repo at Curvature Securities. Oh, okay. Overnight repo rates blipped higher for a variety of reasons. Overall, the street is long and there's a lot of collateral in the market. Less cash coming in the repo market from the regional banks. Given the market crisis this quarter end will be more volatile and market participants are preparing for QE now, the street is long. A lot of paper. There's a race for the exit to get paper funded before 8:30. Okay, yes, I understand now. So when you're doing like repos and stuff like that, you typically want it to be done before 8:30, before the treasury market starts trading. And when we were having the repo crisis, that was kind of what was going on. It was like in the overnight market, that's when you saw like the repo rates going crazy high and stuff. So he's pointing out so, but the key thing here, he's saying overnight repo rates blipped higher for a variety of reasons. Overall, the street is long and there's a lot of collateral in the market. So that might not give us a directly actionable trade, but S&P 500 taking a little jump here now in the past minute. What's with that? Yeah. Maybe that is why we're getting such aggressive selling here in the treasuries, is because they need the money. I don't know. I would have to think, though, that if that's really what was going on, that the equity market would be a little bit more freaked out by that. I guess maybe I'm wrong. Maybe the trade is short the E-mini. Well, you got a pretty lovely pullback to like 10, 11 area. I suppose we could take it there. Like, look, the short volume is still coming in, man. Yeah, and there was, I think what Captain Price is talking about was that there was a little bit of liquidity here in this area, and it pulled. Now he's saying, watch the offers pull. All right, well, there's a lot of volume just in this area in general, I would say. The market maker looks, yeah, look at that. The market maker looks a little bit freaked out about his bids, though. Okay. So 09 is kind of giving me those signals. I'm going to clear this column. Yeah, see, the market orders seem to be willing to hit it, but the bids and offers are a little bit tepid at 09. I'm trying to decide if this, seeing what's going on here in the treasuries, gives us an opportunity in the other instruments. You say weak high in the European. Isn't it weird that the S&P 500 was able to jump from 40.32 all the way up to 40.36 so quickly? And now it just looks like completely dead again? So, you know, a move like that would maybe think news, maybe make me think news, but I don't think it is. Oh, you know, I should also note that the Japanese yen has been on this the whole way. The recovery in USD JPY extends as the bank worries continue to fade, is what Forex Live is saying. The heck? Sometimes the stories that I read from my local news outlets, like the headlines that I read, I'm like, what the heck? How did that happen? I'm not like, what? Former high school girls basketball coach who was already facing 20 rape charges has been arrested near the Idaho-Utah border. 20? What? How does that happen? Oh my gosh, people. You know what? I don't know if this is like a thing everywhere else, but when I was growing up here in Utah, there was always at least one teacher that was kind of creepy and everybody said, you know, was like a sexual harasser or something like that. And I was always kind of like, well, if that's what you all think, then how come he still works here? How can that actually be true? But then, like, stuff happened and people got removed. Like the proverbial uncle with the mustache. It's exactly like that. It's exactly like that. Oh boy. There's a lot of headlines going through in the political world that I don't want to touch right now. You could probably guess what that's about, but you know, so something that I'm noting right now in the treasury. So first of all, pretty clear signs, at least in the volume profile now at this point, that we are in some sort of a liquidity hole between 08 and 10. But something that I'm noticing is that the limit orders, the market makers will kind of jump out of the way and we'll get a move like 2 ticks real quick. And then it immediately reverses. So there's kind of some impulsive action going on here, which is in my opinion very indicative of a pullback within a trend, if not an outright reversal. Because what would always happen to me is I would see that stuff and be like, oh, 2 ticks down, like they still really want to sell. I should get in on that, right? And then it would do this, it would bury me. So another thing that we should consider, if there is like funding going on, so there could be one thing which is selling assets, okay, but there could also be corporate issuance today. So the corporate issuance flows tend to be a little bit later, like 7 o'clock and 8 o'clock, yeah. My time. I'm looking at, you know, we had 15,000 contracts net sell And should I be looking for even more than that to sell today? What are corporate issuance? Okay, so if Amazon wants to offer bonds today, they want to take on some debt to fund their operations, right? Then they will work together with a bank to issue new bonds. And when the bank does that, the bank ends up holding the bonds until they get sold to the public. And so while they hold them, they want to hedge themselves, essentially. Okay. So the long and short of it is that when there is a lot of corporate issuance, they will sell the treasuries. They'll net sell the treasuries. So according to Zero Hedge, at least, that was probably a significant factor behind why there was as aggressive early morning selling in the treasury on Monday, but also why it was quite constrained yesterday. So that's why one of the things that I was pointing out is there's kind of like this cycle that goes throughout the week where, like, if I'm going to do something, whether it's issuing a bonds or making a big deal, like some sort of corporate deal, or I'm going to make a big trade. A lot of how this happens is people are thinking about it on the weekend. They come in on Monday. They're like, okay, we're going to do this. They get 2 days to plan it, and then they go in and they do it on Wednesday. And if you go in, I've done this study many, many times on my own. You can do it yourself with like the range histogram if you'd like in NinjaTrader. If you have the pro version of the range histogram, it should include filters so that you can filter it by day of week and things like that. And you will find that there tends to be a wider range on Wednesdays. You'll see this over and over again. And it's because of that cycle that it like takes 2 days for them to get something going. So it's natural to think that there could be more corporate issuance today than there was yesterday, at the very least, right? Now, how do you know when there will be corporate issuance? I've found this very difficult. I can't speak. I've found this information very difficult to come across as a retail trader live. There are some sources, but they're like very, very expensive. And a lot of it is like live stuff. It's like the company announces then and there that they're going to do it, and then it comes out. So, for instance, something that we saw happen in the past, I can think of 3 times where this happened, where it was either Amazon or Apple decided to do a really, really big issuance. And when that happened, there was like spikes of like 5 basis points in the treasuries. So, but when I'm looking across the market here, like, look, the S&P 500, 40.37 right now. Right. So the question is still like, is the bonds doing this? Maybe give us an opportunity to come over and do something in the other instruments because the other instruments aren't responding. I'd say that at the moment the action suggests no. Right. The S&P 500 doesn't seem to care. The treasuries. Okay, I'm not understanding why they sell. Okay, so if you are long a corporate bond, right, then you are short interest rates, right? If you buy a bond, you're short interest rates. If interest rates go up, then the value of your bond goes down, right? So if you're going to hedge yourself from that, what are you going to do? You need to go long interest rates or short the treasuries. So you sell treasuries to hedge yourself. Yep. Or a simpler way of thinking of it is they're going to sell treasuries into the markets. They're issuing more treasuries into the market. That's more supply. That's going to generally push prices down. Right? Maybe a simpler way of thinking of it. But we got to talk about the hedging thing because that's like the real mechanism by which this happens. Yep, super complex. So if we were like on a desk at like a big bank, then that would be like one of the primary things that we'd be looking at, right? A really big piece of information that we don't necessarily have. But we can kind of use some of our other heuristics to kind of get an idea of when it is happening. So Akshay says it's even simpler. They are taking risks, selling the risk-free paper for risk paper. Okay, sure. Most of the times there's no hedging in this. Why would it? Okay, explain to me why you wouldn't call it, quote, hedging. Are you saying it's not selling because there's a certain number that they have to sell in order to hedge themselves correctly, but rather it's just the market generally overall does that? I don't understand why you would say it's not, there's no hedging. I don't know. They were, I thought maybe they were going to push a little bit higher there. Like they were at 09. I was like, okay, we're back to 09. Maybe we'll get a little bit higher of a move. They just slipped back to 08 so fast. They are just converting treasuries for cash, which gets converted to corporate bonds. How is that hedging? Because they are selling one asset to cover for another asset that they own. I wish I knew what these intraday and weekly. I do too. I mean, that's kind of the issue, is that the more informed you become, the more aware you become of what you don't know and what sort of things you're not very good at being able to see. Yeah, because if you knew that, it can be a very strong predictor of order flow. Yes. But one of the problems though is that, like, the bank, okay, I'm not sure I completely understand what you're saying actually, but maybe I feel like that's a point that we should leave for now. Maybe come back to. Yeah, so I think part of the problem though is that, like, the bank knows, like, because they've already been working together with the corporation to do the thing and sell, you know? But the rest of the market doesn't necessarily know until, like, the issuance is announced, right? And as I understand it, or at least when I've looked at calendars of corporate issuance, it's something that you'd look at live, just like you would a news squawk, you know. If you're running a short treasuries to hedge corporate bond positions, you're adding to your risk profile on a form basis. You don't add risk when you hedge. Okay. I'm interested in that you said they are just converting treasuries for cash, which gets converted to corporate bonds. That kind of suggests to me that part of the reason they do it is so that they have the cash. And not necessarily, because I thought it was you go short the treasuries, you go short treasury futures to hedge. Okay, he says, yeah. So if that's the case, then I think I kind of understand what you're saying a little bit better, because it's not so much I have this asset and then I'm gonna buy this asset so that when this one goes down, I'm making money on this one. It's actually more of a, okay, so we need the money now. We need the actual dollars to do this particular thing. I think though, from like a trading perspective and like okay, which way it's gonna go sort of a thing, I think it's easier to think of it as that's more supply coming into the market, even though it's not more direct treasuries. You know, corporate bonds are kind of a competition to treasuries in a way, right? I mean, it's just more bonds overall in the market. So you should see prices move down and adjust. And it's the same thing with when you are getting like the bond auctions from the Treasury Department auctions, which we do have today, by the way. What is that? Which one is that? 7-year. Oh, it's the 7-year. I wish I had noted that earlier. I don't know if that matters. Do you think that matters, actually? We did have, it was warning us last time about that one that kind of flipped, kind of really significantly changed things. Well, anyways, there's some research on this. If you go into the Discord in the learning channel and you go back like several years, we've posted this study multiple times. But basically, when they're doing a treasury auction, prices tend to decline going into the auction and then increase after the auction. So it's like the market is like absorbing that new supply. It comes down and then comes back up. So last time that we had a 7-year note auction, the high bid was 4.062 and the bid to cover was 2.49, which I believe is high. I think that there could be some strong demand in that auction today. So that might explain to us why, despite there being such a very aggressive sell, there actually has been some pretty healthy absorption against it, and that the liquidity in the market overall is pretty good. Because remember that this ZN is really more like a 7-year. So when they're doing a 7-year auction, this is really paying attention to it. That might help explain some of the flows that we've been seeing. But I think it also kind of suggests to me that if I were to go short, I would really want a good price now at this point, because that means I don't think that lends itself towards like a strong trend day sort of a thing. I think that that's more likely to constrain movement a little bit. In other words, that big decline may have been the best move today, and we may have just missed it. But maybe you could still get a little bit from through here. We'll see. When it comes down there at 08, it looks like it's so... it just looks like it wants to break so bad, but then nobody hits it at 07.5. So that's kind of more of a luring type of a behavior. By the way, when did this end? 6:44. So 7:30. So it's kind of timed to be able to do something when the S&P 500 opens. And given that the S&P 500 is looking quite bullish at the moment. Oh yeah, U.S. pending home sales change. That's not till the top of the hour. Given the way that number went on Monday, though, or that the related numbers on Monday, that they're looking for -3, and it might be a positive number, right? So that reminds me. Decent MBOs at evens in ZF. Yeah. You're always going to see that one, though. So I was watching this TikTok. There's this guy. I don't remember his name. But there's this guy on TikTok that he would do these things that would be like, here's what like kind of rich people do, and here's what super rich people do. And I think kind of one of the points that maybe he was trying to get across was that the super rich people were always really willing to help other people and like used teamwork and cooperate, you know, and they realized that part of what makes them rich is collaboration. And so they weren't rude to servers, and they weren't, you know, these sorts of things. Anyways, good set of videos. But he was talking in a video, and he basically said that he said that he worked on a desk. So that was the first time that I had seen him say anything about, you know, where he got his money from. But he worked for a bond desk. And he said the craziest thing that happened to him while he was on the bond desk was the flash crash. And that like the flash crash happened, and so he started hedging himself from the crash. And then it was a crash, so he started unwinding it all. And when all was said and done, they were only down 30,000, which for them was like a rounding error. But like they had that huge move, and they actually didn't. They came out okay from it. And I was like, I've heard that story before. I think I've heard that story before. I think the guys at the Goldman desk told me about that. So I think I know what desk he worked for now. I could be wrong, but I think I know who he worked for now. And the fact that he's never said anything about it, and that he doesn't, you know, just even reinforces it more. Because if it's that, you're either Goldman or JP Morgan, right? And I'd say that culture is more strong at Goldman. Well, I thought Akshay might get a kick out of that. I'm happy about that one, how that one contract worked. I'm kind of wondering, I guess I'll put another one out of wait. You just let a Vortic move? Well, no, I kind of expected it to come back at me, right? I'm kind of into this mode where I think I'm in a spot where I can do a little bit of my, you know, adding multiple contracts and taking a little bit out of the range. Over here on the micros, though, I don't think that makes sense. Wow, even further in the S&P 500 there, man. Okay, just checking something there. We're good. I was making sure I had things set up right, because I was just looking at like that I had my micros disarmed, and I was like, wait, is that correct? I was checking my trades from yesterday and making sure that they were on the correct accounts, and they were. This could have been, no. I gotta be careful, because they could just like really plow through here again. We could be wrong about what's causing this flow, and it could be something, you know, it could be some really bad. Well, I don't know. Treasury's selling, that's not necessarily a risk off flow, right? But I guess we do have reasons that it's well within the realm of possibilities to have a strong move against us, right? I trade my own money. I trade a very, very small account with micro treasuries. I trade better when the amount of risk on is minimal. Is really what it comes down to. But yep, so I just traded super small account on the treasuries. and I've been really happy with it. And I don't really understand unless you're doing something really degenerate, that you don't want to do with your own money because there's a really good chance it's going to go away and you worked hard for that money. But otherwise, I don't understand why you'd use the funding programs. Yeah, see, it's kind of doing that thing where it'll come down there and it makes you think like, oh man, are they gonna go for it? Like, a little bit nervous, and then reverts back up. I'm not sure what you mean by enough to sustain yourself. So I'm gonna say depends on your costs. No, certainly not. Nah. Yeah. I mean, this is I think one of the biggest misconceptions in day trading, but the chances are that even if you're doing well in day trading, you're not going to make enough to make a really solid living from it. Not that it's impossible or anything like that, but very, very few people actually are making enough to justify, quitting your day job, especially if you're like making $100,000 a year. Like, you're gonna have to have a really big chunk of change to make $100,000 a year from day trading. And I have a 6-figure tech job, so it's not even close. Maybe if I had a few $100,000 to put into it, I guess it could do that. I mean, that's kind of the thing. I got to tell you, man, if you go to a big bank like Goldman Sachs or JP Morgan and you talk to the traders on their desk and you tell them, oh, I want to day trade and stuff, they'll probably try and talk you out of it. They'll probably tell you, it's not a good reason. It's not a good idea to day trade as a retail trader, and I wouldn't recommend doing it. That's what they'll tell you. Where I live, $2K a month is enough? Well, if you can get by on only $24,000 a year, then yeah, I think you could probably make $24,000 a year. I think you could start with a 5K account and get it to 20. Based on the performance that I've had here, especially with when doing these things with multiple contracts. Still, the other issue is it's inconsistent. Like, I think that a lot of what happens in retail trading is you're kind of like struggling and breaking even most of the time, and then you have 1 month of the year that just gets really crazy and you make all your money during that. That happens to a lot of people. But that's kind of tough when you're living off of it, right? And then there's all of the mental stuff that comes along with that. If you're looking to make more money from whatever your side job, right? You're looking to improve your quality of life. Day trading is the last place I would go. Like, just straight up, day trading is the last place I would go. Learn to code. It's easy. It's a much easier, much less risk, much more demand. You make way more. Day trading is for people. In my opinion, day trading is for the people that already have the money, are already quite well set, and have a very strong ability to take on risk. What? You've seen guys in the UK were a different breed than they told every Tom, Dick, or Harry who asked to lean their houses and day trade with their proceeds? Really? Nah. When the few times that I spoke to the guys, to the traders, and I told them, y'all, I really want to trade, but I don't know if the kind of trading that I wanted to do really exists anymore. Because at the time I thought you'd be on a prop desk, and they were getting rid of the prop desks, right? So I was like, I guess eventually I'll just have to retail trade, right? And they're all always like they knew that probably wasn't going to work, right? They're like, well, I've known a person or two that's done it, but I've also known a bunch that traded here and they tried trading on their own and it didn't work out for them. So well, that order at 07.5 is at the front of the queue almost, but it did not get filled. What do you think that tells you? Oh, it might make you want to think that they're leaning, but the reality is that they just didn't, there just wasn't interest. I mean, they did everything they could to try and get people to sell into 07.5 and they couldn't get them to do it. Ooh, there's a good little tick there at 10. The 30 years kind of lagging though. Are we getting a steepener coming through again? Could be. I'm gonna say it's a little bit fuzzy, but yeah, that's how it is. I've seen a lot of superstars on the desk turn into bumbling buffoons when they started managing their own money. Well, I don't think that how do I put this? Some of the best traders that I've seen, I didn't really actually understand why what they were doing was working. It was kind of like they had just randomly stumbled upon a formula that had worked at least in that time period, and they didn't really understand it. And I would be like, oh yeah, like it would make sense you do that because you're taking it at this time of day and this thing tends to happen. And they'd never considered that. They said, well, maybe that's the case. They didn't know. They straight up didn't know. And I think that you, even on the professional desk, you kind of see some of that, where like the company comes in and teaches them the stuff and then they go through the motions. And so they could come in and they could be very successful with it, right? And not realize how much of their advantage was really just coming from the firm. And so it's not uncommon for those guys to go and try trading on their own and realize that without the advantage of being able to see their internal flows, that they don't have an advantage. You know, and I've heard that many times. That these guys, without being, because if you trade at a firm, you'll have a market depth tape sort of a thing, but it will just be the orders that are going through that your clients are sending in, right? Okay, so I would say that this move back to the top of the range looks pretty good, but they haven't like broken out yet. It's also been a little bit wobbly in here. They've been able to trade up and down across this quite a bit still. That depends on which desk you were. That might be true too. You know, because the desks that I was talking to were block traders, right? So the way that they traded was very different because when they traded, they had already made a deal with somebody, right? And it seemed to me like that their edge was really very much quantitative. If you had access to client flows, you wouldn't. Yeah, no. But I mean, they didn't really have any of that anymore, though. Like by this time, they had, you know, Alpha 1 had already been spun off and, you know. Because I think that I was a little bit like, I mean, I didn't really know what was going on. And so I kind of had a feeling about if I had gotten into a professional trading job, what kind of a job that it should be, that probably didn't serve me very well. because I wanted to trade on a prop desk, right? I wanted to be the one like making decisions that like it's going to go up or down or whatever the deal is, right? Now I realize that that's either you're retail trading or you're doing a hedge fund, right? So it's the wrong place. But then I also realized that, hey, just doing block trading is kind of cool too. And all of the other things that they do at the bank is kind of cool too. So I could have done any of that and probably would have been happy. But okay, so now they've broken out. I'm looking at this and being like, okay, should I have taken this on my live account? Because it's looking really good at the moment, isn't it? But the 30-year is lagging, so this wouldn't have been a very good trade in the micro 10s. Even a block market makers themselves say it's not cool and it's more like clerical work. They were pretty humble about it, that's for sure. But I think I still would have enjoyed it. Like I think that anything that would have had me like executing orders in the market would have been fun and interesting to me. And still would be fun and interesting to me. That for that matter. Yeah, like it was so yesterday. Oh man. So I spend a lot of time on LinkedIn, and part of that is because I'm trying to get more information from other quantitative researchers and trying to get more into the machine learning and the quant side of things, right? So I feel like that there's a long way for me to go on that side of things. And I keep an eye out for other jobs. But and the other side of it is that I do want to start an investment advising business, and to do that, I guess, you need to be networking, and so I'm kind of practicing for that sort of a thing too. So you get this email for a sort of a job event sort of a thing, where like you get a bunch of candidates come in, and then you have a bunch of companies come in, and then you can do like speed interviews sort of a thing, right? So I see that on there. I'm like, well, I guess I better go. I got the email from it, so let's see what this is about, right? So I so regret going. So we get there. There's about 60 guys there. And like 3 companies, and they weren't really very good companies in my opinion. They weren't like 2 of them were kind of more like contract jobs, where they did contract work for other people. So they weren't really very interesting jobs to me. And they didn't have that many openings either. So it was literally like they had gathered together like 60 guys to compete for like 5 jobs. So like 10 to 1 for the number of jobs. I'm like, this is dumb. And they weren't jobs that I was interested in, right? I'm glad that I went, because that really showed, there's been this whole thing about that the jobs opening metrics that we've been getting probably aren't real, and they even did a survey with them to say, okay, do you have jobs out there that are posted that you really don't intend to fill, and why, and all that sort of a thing. So yeah, that jobs openings number, total BS, don't pay it any attention, okay? But when I went there, I think it really reinforced to me that like the job market is not as healthy as it may appear on the outside, because even though there is like a lot of positions going unfilled, I don't think that the company like desperately needs those positions to be filled, right? They're not sitting there going, oh, we need this position filled because we can't do work and our team is overworked and yada yada yada, and we just need to get somebody in there, right? If they were willing to do, if that's the position that they were in, then they would say, well, here's this guy, he doesn't fit our needs exactly, but he's a quick learner, and we put him in here, and it's technology, and he'll learn it, and he'll get acquainted really quickly, right? But they don't do that. They say, unless this person knows all of the exact 12 technologies that we use here at this company, then we're not going to hire them. is I think what goes on, which says to me like, yeah, the position is open there, but only if like the perfect dream candidate came along, which might not even actually exist, right? So the jobs market is not as strong as it appears, and we're already kind of getting a turn in jobs anyways. Yeah, in the unemployment rate. So this scenario where we're into a recession by the fourth quarter of this year, I think is a real strong possibility right now. Look at that monster iceberg at 40.41, by the way. So anyways, I'm driving home and I'm thinking about it. I'm like, well, yeah, I mean, like, I'm pretty happy with my current job. It would take a lot to move me away from the current job because there's all the risk involved in switching jobs, and it works really well with my schedule and doing the stream and everything. And if I went somewhere else, you know, maybe you wouldn't be able to do the stream or whatever the situation is. And it really came down to like, well, it really would have to be like straight up in the financial industry. And the kind of job that I really want in the financial industry, probably you're only going to get if you live in New York. It is anecdotal, though. Yes, that's true. But I guess the thing is that like if there was, so a lot of people will say that this is a market that favors labor, and I don't think that it's as favorable to labor as people are saying. Because there are a lot of people that have jobs but are still looking to switch out. Like, I'm pretty sure that almost everybody that I saw there already has a job. At least everybody that I heard talking, they worked somewhere already, right? But they're looking to trade up. They're all looking to trade up because the raises aren't in line with inflation, right? So when there is a position that they really do need to get filled, right, they get like 100 applicants to it and they fill it very quickly. And we have some metrics that kind of suggest this, but then like when I saw it firsthand, when I start to see it firsthand, I'm like, oh wow, yeah, like it really is. Some of the metrics that we're getting on the jobs market are really truly like very deceptive. What? Ohio River disaster as a barge hauling 1,400 tons of methanol smashes into the dam. Why are we getting so many environmental disasters like this all of a sudden? Trains derailing every other day, and jeez. Well, as for this trade, I'd say this has gone a lot better than I thought it would. You know, in some ways that experience makes me want to like work on the stream harder, but then at the same time, I'm often kind of like, you don't actually want that. The things, if you really want the YouTube channel to become like a huge successful YouTube channel, it would be like a completely different channel that you would enjoy. I would love the channel to be about talking about the sorts of things in economics that we talk about every day, right? But it doesn't seem like what people want. So like somebody sent me a video yesterday, wanted to know what I thought. I haven't been able to watch the whole thing, but like the first beginning of it, I was like, this is sensationalism, right? The reason that people are watching this video is because it's sensationalized. And I was just kind of realizing like that reinforcement mechanism that happens in social media, that like in order to be successful on social media, there needs to be some sensationalism in it. And then that kind of, because people are constantly being exposed to this sensationalism, that's, you know, that's all they want, and that's what everybody ends up being like. I guess in some ways, though, that could be beneficial to us as traders, right? Like that could be exacerbating volatility. Is that because of the sensationalism, average investors are making more impulsive decisions, right? I mean, that's certainly how it felt in 2021 when we were having a bull market. And I do feel like that a lot of these bear markets have been more, we've been in a bear market now for like a year and a half, 2 years. But when the bear market is getting really bad, like it's really bad, and I feel like it's excessive, right? So think about this one. Is it over? That is to say, we had a bit of a banking crisis over the last 3 weeks. This week has been relatively quiet. Does that mean that the market is over it and that it's going to be quiet from here on out? Well, I would say yes and no. So yes, because I think that the current crisis has kind of been solved, but no, because it looks like interest rates are going to continue rising, and that there's more turmoil later on down the road, just with, slightly different things. So for instance, commercial real estate, if interest rates keep rising and everything, commercial real estate could start to become like a real disaster at one point, right? So there will be like other things will pop up. And then you got to realize that like this isn't the first bout, and I wouldn't even say this is the worst bout. So I think everybody is acting from the perspective of, okay, we just had this banking crisis. Now that's going to be the thing that creates the recession. And this was like really, really bad and everything. Okay. But think for a moment, it was only a couple of months ago that like the entire United Kingdom pension system was under threat. Okay. And y'all forgot about that one. Everybody just went on with their lives. In fact, a lot of people didn't even really know what was going on or understand it at the time. Is that not worse than what we just had happen? At least if the regulators and the people in charge had screwed up, it probably would be worse than what just happened. Than what could have just happened if the regulators had screwed up on this one, I heard some chatter about Schwab last night. Yeah, well, I mean, that one's kind of been on and off too. So right now the targets are Schwab and Deutsche Bank, right? And both of them have already kind of had runs and survived them. So I don't know if there's any reason for us to really be actively concerned about Schwab right now or not. I don't know. I would say this rise that we're seeing here in the treasuries a little bit stronger than I anticipated. Erasing the huge decline in cumulative delta that we saw at the beginning of the session. So hey, could be a couple of different things that are pushing that, but one of the things that could be pushing it is risk off sentiment. We're not really seeing a sell in the S&P 500 yet, though, so. Oh, I missed something from Nick Timoros. U.S. average 30-year mortgage rates have been above 5% for nearly 12 months and above 6% for more than 6 months. Applications for home purchase loans are still running around 40% below year-earlier levels. Okay, there's an uptick. Let's see if I get filled here. Kind of looks like it might need a little bit more time. Wow. Something just, did you see that in the spoos? Did you hear that? Did you hear my little alert? So they just slipped down and there was a couple of prices there that got skipped. And it just like tumbled 5 points for no apparent reason. Come on, that looks better. That's looking good. Come on. Good deal. Good trade. Good play. I part of that was like because I was able to get the contract like 2 times across that range. That really gave me some really comfortable risk and everything. So I'm not ready to do that on my live account yet, but that was a great trade. It sucks that it was a sim trade. Now for a live trade, we were still saying we favor the downside. I kind of think that this move up kind of cancels that out, doesn't it? 5 points on ES is that big? It's definitely an unusual move to go 5 points all at once and to like skip some prices, especially when that's like the whole range of the day so far. That it's not big enough that it could be totally endogenous. It could be completely endogenous. That's for sure. But I'd still say it's an unusual move. Yeah. On the other hand, for the regular session, 20 minutes into the regular session and the range is only 5 points. That's also extremely unusual, right? It's only about a base point. That's true, but you still don't just do it all at once, right? And see some market makers poll and see one of the prices in there just completely skipped. I'll see about a slip like that every day, but not like in the first 30 minutes. Coinbase pitches inflation-proof flat coins against struggling USDC. What? You know, I've always felt that of the exchanges that Coinbase was the most legitimate. And I continue to see Coinbase do sketchy things too. Like when they were doing their lending program and they're like, well, it's not a security when it so obviously was. And they whipped up all of their users into a frenzy about how they were being persecuted by the SEC and everything. It's total bullshit. It was like, this isn't going to go to court because any lawyer with half a brain is going to tell them that they're going to lose, right? And of course it didn't. They dropped it within a week, but oh man. Oh, thinking about that one kind of makes me mad because I made TikToks about it and there's so many shitheads that I need to watch my language, man. I'm getting too emotional. There are so many idiots on TikTok that were like, "Oh no, this is persecution and everything." I was like, "You guys have no clue what you're talking about." And there was even this guy that claimed to be like a crypto lawyer that was like disagreeing with me, and I was right. They dropped it within the week. Okay, decent pullback from that. So I guess if we wanted to go long rates here, we could we could maybe still justify it. I do not like the look of that cumulative delta all the way up here. It's been buying that whole way. At least in the 10-year it has been. The other two, it's just kind of a bounce. The cumulative delta hasn't really changed at all through this whole move up. So that I don't think is in line with a trade for us, fortunately. We could still get opportunity, and we do have pending home sales at the top of the hour, right? In fact, it's coming back quite quickly. I wonder if that's just the market maker really has control of the market. I don't know. It's a little bit dramatic of a sell-off. Okay, so FedSbar is speaking in the House Financial Services Committee again. Or I think yesterday it was the Senate, and now it's the House. Let's keep an eye on it here, because the order flows are doing something interesting, even though it's not necessarily something that it was in line with our expected flows today. And so we may come to a point where we do have an opportunity. Somebody just posted an image in the Discord chat that says, "We do this not because it is easy, but because we thought it would be easy." How have I never heard that? Is so hilarious. How is that not a more popular thing? Really is truly hilarious. And we're coming back up here. See, if I had been waiting, if I'd been sitting, if I was still like, oh, this is definitely a short, and seeing it turn down a little bit there, and especially as aggressive as it was, I would be like, oh yeah, I want to be short and I want to see it run. And now I would be seeing it come right back up into me. Right? So that has me a little bit wary of this market. I think that is more indicative of a market maker being in control and playing tricks with people rather than some real flows coming through. What's this? A lackluster pre-indictment gate small dollar haul highlights a very unlikely vulnerability vexing the Trump campaign. The easy money is no longer there. They're not their fundraising efforts aren't very effective anymore. that headline, I wonder how real that actually is, but I totally believe it. You know, I don't know how real it really is because I have empirical evidence on that one, but sounds like a likely thing. And if that is, that could be a really key thing going forward for the 2024 campaigns. Isn't it? Is it like okay to be a little bit excited about the campaign season? No, it's not. It's still going to be a disaster. Still going to be a disaster. No. I guess we should make videos about it. Maybe we should make videos about it on a different channel, though. That's just for the politics. We did kind of make a channel, but it kind of had like a false start. I have like way more equipment and stuff for that sort of thing now. So we could maybe try that one again. Let's see here. I got out at 14.5, right? Correct. Wow, that was a good trade. Not excited rigging. It seems to me that some of our systems in the United States are so entrenched. This idea that like the voters are in charge and decide what happens and everything is not. It's not really the way that it works, because you can manipulate and control the public so easily. I mean, that's the thing that's always dismayed me. I've seen it here in Utah. Is like you just go, and we've had this caucus system in Utah for forever, and it's worked really well, and it's led to a certain peculiar political environment they have in Utah, but it's also led to really effective management of the state. And then you just come in with the right campaigning, with the money, and it's just so easy to manipulate the public in favor of some of these policies that are just like really bad, objectively bad. And now it used to be that I would, you know, be able to work together with people and be involved and be, you know, okay, here's this guy that's kind of been at the caucus system. He seems smart and we should move him up, you know, and give him these positions because we know that he's good at it and he's been effective and stuff like that, right? And I've seen it move from that, where we were directly interviewing candidates and seeing who was really right for the job, and then all of a sudden it turned into whoever had the most money won every time because of the advertising. Because you could skip the caucus system, and then when it came to the primary campaign, it was literally just who had the best name recognition. I find that very dismaying, and I see that across the board. And some people will say, well, we need to limit lobbying and we need to do campaign finance reform and so forth. I'm not convinced that those things fix the problem. Because the real problem is that people shouldn't be that easy to manipulate. Why did our public become so ignorant that it's so easy to manipulate them? Okay, so here's our economic numbers. Pending home sales index 83 spot 2. And pending home sales change spot 8 versus an expected negative spot 3. So as we expected, number a little high. And I could buy rates here. That was kind of the trade that we took yesterday, wasn't it? Seems a little tepid though. I'm not seeing a whole lot of flow coming in off of that number. It won't solve, but it'll help. Corporation and state have to be separated as both are influential institutions of power. Yeah, like, I mean, the issue here is that I think that the world is incredibly complicated and that making good decisions is extremely difficult. And the public doesn't seem to be interested in the kind of work that's necessary to make those kinds of correct decisions. So, having so I would be opposed to a system where the corporations had like zero power. Because what would happen is the public would always make really stupid decisions, and you'd never be able to get the economy off the ground. Essentially, you would just create an environment that's hostile to businesses. Like, okay, so like a slight pivot here, right? One of the big issues right now is TikTok, right? Because Congress wants to ban TikTok, and there's pretty bipartisan support for it. Okay, I don't think that we're being told everything about it, but it seems to me that TikTok is a propaganda tool for the Chinese government, man. Like, it just straight up, it is. I do not give a crap about arguing about whether or not TikTok should be banned or anything like that. Like, when people on TikTok show up on my For You page and they're talking about that, I immediately scroll past them. And I have always immediately scrolled past people making sensationalist headlines, but just talking about the TikTok will get banned in general. I don't care. I don't want to view stuff about it, right? But you know what? Every other video that I get recommended is about that subject, right? Everybody says, well, the reason that this stuff shows up on your For You page is because that's what you're interested in and that's what you're watching. Bullshit. It's not. What shows up on my For You page is what the Chinese government wants me to see. I guarantee it. There's no way, based on what I've seen, that the Chinese government influences it, right? And the straight up reality of it is that you can manipulate public opinion so incredibly well with manipulation of social media. It's just insane. And the public, like, seems to be completely ignorant of it. They don't realize, like, how the Democrat Party manipulates social media, for instance, to their advantage. They because nobody wants to come in and say, oh, well, the decisions that I'm making and the beliefs that I have are largely a function of the media that I'm consuming. Nobody wants to say that. But it seems to me that that's just like the cold hard truth of it. Like, your brain is a machine learning neural network. And how the decisions the conclusions that neural network will come to is largely a function of how that neural network is trained. And if you're sitting looking at a phone screen for 6 hours a day, that's training that neural network in a certain way, in a way that is advantageous to the people that control that medium rather than to your advantage. And all my life, I've always been told that, like, it doesn't matter. Like, kids watching violent cartoons, it doesn't matter. It doesn't actually make them more aggressive and things like that. Well, like, that might be true because, like, what is the training for your neural network that you're actually getting from television? Is it training your neural network to become violent? I don't think it is. But when it comes to people expressing opinions, yeah, it does. It affects the way that you think. It does. And we as traders should be very careful about what kind of media we are consuming and how it might affect, because essentially the media that we're consuming will directly affect our trading, essentially. It's all tools, yeah. And as far as I can tell, this is all just like biology, maybe biology that we don't completely understand, but like that's very clearly there. Like, they know the people in power know how much they can influence public opinion using these kinds of tools, right? But what dismays me is how ignorant the public seems to be about it. Nobody ever sits down and says, oh, maybe I have this opinion because of this and that. I think it's very much the case that many of the opinions that I come in and take on in regards to the financial industry are based largely on things that I picked up when I worked for the bank. I consider that to be an advantage most of the time. But it's absolutely, I have like a way of thinking and approaching those issues that's more in line with what the banks tend to think than what the public tends to think. And you guys give me shit for it all the time, but I think I'm right. I don't know what to think of the treasury here in this location, man. So we had a move down. Let's look at this from a deeper perspective. Try and analyze this past behavior based on what we know about the markets. So we had a pretty aggressive move down, right? When the volume started to become very aggressive, we created a liquidity hole that we sat in for quite some time. Now, since that time, the flows have turned around the other way. We had a move that was much more gentle, but retraced back up, right? I guess there was from this beginning move, we started from here and moved like a really far away. And so there's still some of that volume to retrace out. But the gist of it is we had a meta order this way and then what is likely to be a meta order this way. And now we're kind of stuck in the middle. And while it has been volatile through this range, because, you know, the market maker circuit's starting to pull their orders and everything, that doesn't really give us a whole lot to work with in terms of like what is the next meta order. Is it going to be up or down? In fact, it might suggest that we again sit here within this range for a long time. So it's a little disappointing, but I don't know if we're going to get another trade today, or if we're going to get a live trade today. I guess there was a point I could have taken 3.61 and I could be up $20 today, and I'd feel pretty good about it. But I think that would have been a lot of risk involved with that, because it would be on a reversal in a place where I didn't necessarily directly expect a reversal. But interesting market action though. And the S&P 500, while it has had like its moments and everything, it's been incredibly tight today. It's been incredibly tight today. Well, let's just see. I mean, there is a possibility that they go for these highs and then things could get interesting. Right now, though, they've been bouncing off. Look at this. So we had a push back here. Where did I take my profit at? Right where the seller cost basis was. Came back down below it. Came back up. And look, we're just bouncing off of that. I heard of TR. I don't know. I hear lots of acronyms. What does this stand for? Is that Trading Research Group? I don't think I've heard of them. Mm-hmm. You think they're legit or no? Well, they have classes. Never heard of them before, so how would anybody be able to know? 2019? Oh, they are fairly new. Let's see here. They have testimonials on here. These testimonials look like they're in line. They're not saying, oh, I made so much money, blah, blah, blah. You can too. Start learning order flow trading for $25 a month? Or is that monthly, or is that just a one-time thing? I wish you would make the cost basis indicator for Sierra charts. Maybe it should. Here's the thing is I don't think that it would make a whole lot of sense to just put the cost basis indicator out there for Sierra charts and then charge $100 just for that indicator. You know? Well, I don't know, G59. Like my take is that I've never seen an education course that held a candle to the information that you get from just reading like real empirical research studies, going to archive.org and reading things like that, or reading books that are based on that kind of research. And that's where I would suggest that you go and learn. And most of the time, these classes are just repackaging stuff that other retail traders are always saying. They call themselves Trading Research Group, but like just browse like really quickly. You know, on their Twitter, I don't see any actual real research. Maybe there is, you go watch their videos or something, but I'm not seeing it. I'm not seeing it. So I would be skeptical. For sure, I'll take your word for it. Well, let me try and approach it a different way, okay? Unless you see empirical data, you should just ignore it. That's my approach. Is that when it comes to like technical setups within the markets, if there is not empirical research backing up what they're saying, you can just ignore it. Just ignore it. They don't present empirical research, then it's trash. Basically, it's if it's not somebody that's doing the research and knows the data science and doing all this stuff and showing you the actual statistics and behavior of it, then what it is it's somebody that just happened to have success, or maybe they didn't even have success, but for whatever reason they feel compelled to go and provide a free go and provide an education course based on that success, right? And you have no idea if they were really that successful, if it was based on luck, if the money was actually made from the strategy that they're claiming it was, if what you're teaching was actually what they were trading. if they really actually even understand why they had edge in the first place. You know, like, these are all of the problems that you face when it's not empirical research. And so I would encourage traders to do empirical research, because quite frankly, I think that every one of you, if you've gone and watched those order flow videos here on my channel, and you're here every day watching us, you know, analyzing the markets and trying to analyze where the flows are coming from and the impact that those flows are having on the market, I think you know 10 times more than what all of these other educators out there are trying to sell you. Because the stuff that I've taught you, we know is based on empirical research. And the stuff that they're teaching is, who knows? Who knows if it's real or not? How can you ever possibly know? Like, at that point, the only thing you can do is, like, try trading it yourself for 5 years and seeing if it works out. I would rather know from the very beginning, you know? They are still trading a pretty wide range here, I must say, in the 10-year. Given that there's an auction today and everything, I find that a little bit fishy. Also, I would note that from here to 09, the liquidity is fairly light. I find it so frustrating that that's the sort of things that the majority of retail traders go to, but I just need to get over it. I don't know if it's ever going to change. Like, there are certain methods that have kind of, you know, dominate the retail trading world, and they're entrenched, you know, and they defend their territory essentially. Tricky day, says Octavius. Yeah, I mean, I think that both the move down and the move up are things that you could have potentially have seen coming. I don't think that we had a really strong edge that they were seeing coming, but I think that there definitely would be a few traders that would take advantage of it. It seems to me like that because of the really weak liquidity, that the treasuries have been responding to market volume really, really well, right? But it's like really sparse, right? It's like you get a big order. There's only been 2 big orders, right? There's been times where, like, you know, treasuries all over the place, and it's like way more complicated because there's way more complicated flow. I read a paper that shows that the repo spreads spike at the time of the announcement and then settle down. Well, I don't know how we would predict that. That sounds like that's predicting some flows in the repos, but spreads would just be like, I don't know. It kind of depends on what they're. Sometimes people can mean different things with spreads, but I think what they're talking about is the difference between the bid and the offer. If that's what they were talking about, though, that seems like that'd be kind of like a no duh. Yeah, they reduce liquidity going into large events. Okay, but given that we know the times and days of the treasury auctions, couldn't we predict order flow around that, where you have pre-trading at the announcement and up through the issue date? Yeah, 100%. So the overall seasonality of a treasury auction is they sell going into the auction and they buy after, but that generally overall you make money from buying. Okay, now part of why that stat that is like overall you make money from buying is because over the last 15 years, the treasuries have been mostly buying, right? Now that we're in a down market, it's a little bit different, right? But so now we also have to consider how much demand there will be for the auction. Okay. But part of what has been happening has been the rates have come down so much here and everything. There is a pretty decent amount of demand for them because of that. So I would if I wouldn't recommend trying to hold a position through the auctions and all that unless you already have like a ton of profit baked into it. But the guess I'm making based on what I know about the flows and everything is that you buy. That if you bought before the auction, that you'd probably make money. I think that the demand that you're going to see at the 7-year auction is going to be pretty good. So I keep on telling about OTR auctions. They are important because pension funds, target date funds, and index tracking funds sell the older issues to buy the on the runs. Seems logical that a strategy could be engineered with that info. Yeah. Well, so I guess what I'm saying is that if you just buy before the auction, overall you would make money. But the Sharpe ratio on that simple of a strategy, not very good. Okay. There's a lot of other information you could incorporate, and I think that we've already kind of talked about the information that we have that we can incorporate into it. There's some other information that the really big guys have that. So when the auction is about to happen, Financial Juice is starting to do it too, but News Squawk definitely does it. They have a synopsis about it, and they talk about the speculation around the auction and certain factors that they think might affect the demand at the auction. Right. I guess the other thing is that we don't talk about the auction as much on the stream just because it always happens when we're gone, right? The strategy is to spread the OTRs, but that would require a cash market positions. Yeah. Yes. No, you're totally right. Every money knowing there would be selling of older bills into the new bill auction, that could be a predictor of order flow. 100%. 100% could be a predictor of order flow. It would be a predictor of order flow in the actual QSIPs that are being sold, unfortunately, and not necessarily in ZN. Right? But I do think that you could come in here and do a little bit of modeling and so forth to say the auction is likely to cause X amount of selling or buying in the treasury today. Probably you could do that. And of course you would have to combine that with the other information that's still going out in the market and other things that are going on. But like that is one predictor of order flow, and it's a very important one for us, yeah. You know, and if you were trading a different market, like for instance oil, okay, like the corresponding equivalent in oil would be like the EIA. In fact, the report that we have here in 5 minutes, right? So in 5 minutes, we're going to find out what the actual inventories are for the oil market. That tells us how much the supply is, right? Similar sort of a thing. And yeah, informed traders can even go as far as to create really solid estimates for what that number is going to be. If a market maker has put up liquidity going into the auction and the price moves, then after that initial move, they would try and rebalance back to the price at auction. So that's a different kind of a question. Yeah, I think it makes sense, but I think it's a different kind of a question. So first of all, you know, they're going to pull their liquidity going into that event, right? Like they don't want to have a whole lot of contracts going on into that. Okay. If you do have a move, right? If you're a market maker and you do have a really big move, well, like you have some choices, right? You could puke it and exacerbate the move. But, you know, if it's something that's going to keep going against you, like it's better to just puke it as early as possible, right? On the other hand, you could just start market making against it. Has a move up, you start market making against it and hope that it comes back, right? You're overlapping primary dealers and market makers. Yeah, that's a good point too. So there's the market makers, which are the people putting the limit order bids and offers here every day and are just trying to make money off of the spread. There's also the primary dealers who may be doing actions here in the treasury market to hedge what they plan on doing for the auction that can also be creating some flows, right? So then the next thing that I would say is that a lot of options are also used in all of this. And that when the options pit closes, that's when you tend to see the most volume. And a lot of those open positions with inventory and so forth are closed when that pit closes. You guys know, well, Freak Akshay knows a lot about this because it was his job. and I don't think that I know as much as Akshay. But when you sit here and you spend 2 hours a day thinking and talking about it and sharing information with other retail traders, you pick things up. This is why we need to make a book, right? Nope, I don't know anything. Like I said, the deeper you go, the more it seems to stare you in the face how little you actually can know. And, you know, especially compared to other professionals in the market. No. So the options pit time for the treasuries is different than the other markets, right? So our market opens at 6:30 Mountain Time, and it ends at 1 o'clock Mountain Time. So if you come in here and you watch the 10-year at 1 o'clock, you will see like things that if you've never seen it before will just like make your eyes pop out your skull. Like you will see like a 6,000 lot bid and a 6,000 lot offer, and they'll kind of like come closer and closer together until like they're negotiating on a price, and then one side will give in and they'll trade through and they'll close their positions out. Right now it keeps trading after that, but that's the pit session. So because so much of the volume that we're seeing here in the futures is also related to options, then when the options pit closes, that's when you see the most volume. They do trade after that and for that last hour of the S&P 500 though too. So that's the time of rebalancing portfolios and inventory management. Yes. So that's a place where if a market maker has a ton of positions on, there's some other options. There's some other guy on the other side of it that has a ton, and they just kind of work it out somehow. I don't know exactly how that all works, but you always see a ton of volume there, and you always see these big bids that show up. Okay, so far off of the oil report, it looks like oil is moving a little bit higher. Looks like there was a larger draw than anticipated. Now, the other thing that I would say is that, like, on the very, very micro scale, obviously what the market maker does is really critical. Although a lot of what the market maker does is just like is adjusting his bid and offer based on correlated instruments and things like that, right? But you got to remember that the market maker doesn't want to trade against the informed trader, right? So we don't necessarily focus so much on what the market maker wants to do, just because if we know that there's informed trading, that is going to dominate, right? So we don't ignore what the market maker is going to do, but that's just not their primary, because what a lot of people do is they get stuck into this, okay, so if I'm the market maker and I want to screw people over the most, what am I going to do? Yada, yada, yada. And like their ability to actually do that is a little bit iffy, right? Like I was saying in this one, like since we've gotten up here where we've moved around quite a bit, like a lot of that is just the market maker says, okay, I will absorb offers, but I'll let bids go. And so that it'll come down here, and then maybe I'll start absorbing bids and do it the other way. And that kind of allows this randomness in the market that allows them to make money. So, but that's about the power that they have, right? Is that they can control how much liquidity they're putting up in a location, and that's it, right? So if somebody's going to come in and buy 20,000 contracts, like they're going to, they don't have any control over that. Right. And that you don't want to fight that either. So you let it happen. And then when it's done, then you start your market making again. And if it was against you, then you make it back down here. So like the trade that I was doing earlier in the week is a really good example of that, right? Because I was long the treasuries. The treasuries went very short, but what was happening was I was making enough on the pullback legs that I was still like constantly coming to break even and just bringing my cost basis down over and over again, right? These are the sorts of things that market maker can do to deal with those problems. Things that you as a retail trader wouldn't recommend doing. Right? Apparently there's a congressional hearing going on relating to Starbucks, and some news outlets are making a big deal out of it. I was not aware that that was going on today, though. So you know what? I'm just thinking, because this just came up on my Twitter feed. I want to start a poll here. Recession 2023? Yes, no, ask your community. For whatever reason, and based on the market action, you would think it would be the opposite of this for me, but I'm more concerned about the risk of a recession for this year today than I was yesterday. I'm more concerned about it. I'm seeing some dynamics that don't look good to me. Lies, market makers are out to rip you by putting up billions of dollars to move prices to hit your stops on your two lots. This is like really when you hear like the price action people talk about it, it just really shows how little they actually understand about like the order flow and how the market works. Is like if the market maker the people who are putting limit orders up, right? If they want to come and run your stops, how are they going to do that? Are they going to be the one that comes in and buys contracts to push it? I mean, that's a lot of orders and everything, right? That's not what the market maker is about. The market maker is about making the spread from correlations and arbitrage and other sorts of things, right? They're mostly controlling their bids and offers. Now, what they could do is they could say, oh, well, we have this big order up here at 1814 and they're getting awfully close to it. I'm feeling nervous, so I think I'm going to cancel some of my orders because I don't want to get filled there. And they pull their orders, right? And then that creates this kind of game where other traders, kind of more speculative traders, will say, oh yeah, if I smash this offer at 17, then there might be some people stopping out and we could see this volume come up through there, right? So it's not necessarily the market maker that's making it happen, right? It's just kind of a whole bunch of other things that kind of come together based on the microstructure of the market. So if you come in with always looking at the market from the perspective of, okay, so how is the market maker going to try and screw me over here in this situation first? There's some situations where it's going to seem like it works really, really well, but it's not going to be a very profitable strategy for you because what's actually going on is much more complicated than that, right? And if you're playing that kind of game, what you're going to end up doing is you're going to look for a break like that, see it come back, and then try and get it on like the pullback, right? And what's going to happen is you're always going to miss the strongest moves, and you're going to end up going against some of the strongest moves. Yeah, from what I've heard on YouTube, that's the concept behind the smart money they use market. Yes, this is smart money concepts. They use market orders to spoof price into areas where stop orders are resting. But like, that's the thing is like, in order for that to work, right? Okay, so we have a market here. I'm one of those guys with a ton of money, right? And I see that there's a big order at 17, and I think if I can get price to get above 17, then all of these retail traders will get stopped out, and then I can exit my position, right? So what am I going to do? I'm going to come in here and I'm going to buy 15,000 contracts or something like that to push price up beyond that 17, right? Okay, so now once it's done that, how do I get out? I'm going to have to sell 15,000 contracts, right? And what do we know about that? Because the liquidity below us is going to be weaker. If I immediately sell those 15,000 contracts, I'm going to net lose money on the trade, right? Because my market orders selling are going to have more impact. And so it's going to be net short. Or I mean, the net difference is that the selling is going to move more and I'm going to lose money on the position, right? So that would only work if I was able to buy 10,000 contracts up. And then after this broke, I was able to get 10,000's worth of limit orders filled up in here, right? That's like really risky, right? Because what if it doesn't do it? What if these guys, they don't care? Comes out, you're screwed. Now you're 10,000 contracts and it might even be back where you started from and you have to sell them and it's going to move it when you sell them, right? You're screwed. Yeah, I see you guys noting that there's some pretty heavy selling in the ES. There's some really big icebergs in here and they're pushing through them. So far, it's not, they haven't broken out of the range too much, but the deltas on it seem significant to me. It's about 13 to 15,000 contracts net short here over the last, I'm going to say 10 minutes. So we may be getting something real coming into the treasuries into the E-mini. And it does look like there is a slight bid here in the treasuries as a result in a flight to safety trade. You think it's going to break? Well, seeing that much volume going into the absorption could be a really strong, you know. This one is so funny because like if I know that there's a strong meta order coming through, you know, and I'm thinking like today could be a trend day, then seeing these big icebergs and seeing them blow through these big icebergs is like really good for me, right? But then on the other hand, if I think that there's something special about this price and it's going to hold and they're going to absorb against it, then seeing those big orders is also like really good for me, right? So you can read it different ways. Yeah, so anyways, Trading Bunny. The one of the things that's the most popular on YouTube right now is the smart money concepts. Okay, so like I am going to just absolutely shred this to pieces. Okay, because I think I already talked about like some of the concepts that they have behind it and why they don't really make sense based on what we know about order flow, right? I think I already talked about that. The biggest one being the inverse sine law, that if you buy a ton of something and then sell a ton of something, it tends not to be a profitable trade, right? There is definitely a thing where, you know, like if you can hit into them as it's going and it pops through, but I think you would only do that if you thought that there was going to be more like there was somebody buying anyways, right? You just trying to engineer it yourself is probably not too wise. Okay. So the way that this actually happened was there's always been a pretty strong contingent online of people that believe in price action, essentially, right? And price action is all just a fancy way of describing a form of technical analysis that tends to be based on where was the last turn, right? Like here's the high, and then here was a turn over here, and you know, if they get higher highs or higher lows and some sort of combination of that. That's Dow theory, is by the way. Dow theory was basically about how the market will tend to make higher highs and higher lows, and then lower highs and lower lows, and these kinds of different fractal patterns, right? So it's Dow theory. But anyways, that was price action. And kind of what happened was the price action world kind of got saturated of sorts. Basically, like there's max price action trading system, and there's what's his bucket, who's been around for frickin' ever. What is that guy's name? This other guy writes books. Al Brooks. That's right. So they had Pats and Al Brooks, and they kind of started to dominate the price action trading space. Al Brooks, man, has been around for so freaking long. That one really drives me crazy because like he claims to be like a profitable trader and anything, but he won't show anybody results or anything. And like if he does live streams, it's like it seems like what he's saying to people is like intentionally confusing so that nobody really knows what he's talking about. Anyways, there's a, if you go to tradingschools.org, they're really good at reviewing education and trading rooms in particular, and you can see his review about Al Brooks and you can see what his experience was. Okay, it's kind of funny. I think he's a phony. Yeah. So, but there was the thing is that people want to believe in price action. I mean, it's like, it's a really good marketing term, right? It's like, who's going to argue that like the movement of the price doesn't matter in some way, right? Even I used to say that until I like started testing these strategies and realizing that they didn't make any sense. Yeah. Tradingschools.org. So this is old rich guy that has tons of money and goes and does these. He hasn't done anything in a year though, so he's kind of got inactive. By the way, it was 18 was the high, right? I don't remember. I don't know. So if I was doing the if I was the smart money here, I don't know if I would be too happy about how this is playing out, to be honest with you. So it didn't just blow through. I might be wrong. The open might have been 17. So you got two ticks through that. I don't know. But I think what's really going on in this situation, so this might be a really good example, a really good counterexample to what the price action people tend to look for, right? Because I think what's going to happen is the S&P 500 is going to continue selling and the treasuries are going to continue to bid. And the treasuries are probably reacting to what's going on over here, right? What is the microstructure explanation as to why price often reverts and fills gaps? Okay, well, so it depends on what you mean by gap. So if you have a quick move through an area, especially off of a piece of news, you're extremely likely to retrace it because of the lack of liquidity in that area. So it doesn't take a whole lot of orders for them to sell back through that area, right? But when we're talking about gaps, so most traders, when they're talking about gaps, they're actually talking about overnight gaps, right? They're saying, the S&P 500 is 20 points higher than it was from the close of yesterday, and so we need to fill that gap, okay? And the idea is that gaps tend to fill. So if you look at it statistically, yes, gaps do tend to fill. But the main reason why gaps tend to fill is just because of volatility, right? Volatility tends to cluster. So if we had a 30-point move up, right, that's like what the market is doing. Pretty good chance that you're going to be able to have 30-point sell too in that kind of market volatility or whatever. I should be using much bigger numbers, huh? Used to be that 30 points in the S&P 500 was a lot. So, yeah, a lot of the statistics that you might pull out of gaps, like overnight gaps, probably have a lot more to do with volatility, right? And more and beyond that, I would say that you got to be really careful with them, because especially in an individual stock, looking for gappers is a common stock trading strategy. Because those tend to run. Like there's probably, if they're gapping and like the rest of the market is not, like there's a reason why, right? There's going to be activity in that stock because there's probably some sort of news or something, right? And that can be the sort of situation that can just keep going. So that's gaps. Anyways, I was trashing price action. So anyways, here's what happened was that because there was like so much domination on those terms, when the new creators wanted to come into the space, they weren't going to rank very high on the search engines and things like that. So they had to come up with their own stuff, their own terminology. So what they did was they took all of the same concepts and ideas from price action, and they came up with a slightly different explanation for why they occur, which was that the smart money market makers are messing with you, right? And then they taught all of the same thing, and it's all the same stuff, but like they're using their own terminology and stuff, right? The most prominent of these being a guy named Inner Circle Trader on YouTube. Now, Inner Circle Trader is a kid that has been around for a very, very long time and started in the Forex space. And when he was in the Forex space, there was Baby Pips was kind of like the main forum over there. And so he would constantly get into drama with the people in Baby Pips. And so the people on Baby Pips were like screenshotting every comment and stuff that he uses or that he posted and tracking it. At one point, he was bragging really big about having one of those trade tracker sort of things. And he was bragging about his performance on that trade tracker. And then he blew the account. And he was so embarrassed that like he disappeared and everybody at Baby Pips made fun of him and all of this stuff. And after that, he focused more on Twitter and Reddit, right? And in the Forex space, the people on Reddit like really started to get fed up with him, right? And so when he had drained the Forex space dry, there wasn't any opportunity for him there anymore. He, in the past year and a half or so, I would say, has moved on to futures. So now he's sharing these ideas in futures. Okay, let's see. What did ChatGPT see? When there is a gap in the price of an asset, it represents an opportunity for market makers to profit by buying at the lower price and selling at the higher price. As a result, market makers may be incentivized to fill gaps and bring prices back towards their mean levels in order to capture the profit opportunity. This activity can create a feedback loop as other market participants absorb the price movements and may also take action to buy or sell in response, further reinforcing the trend towards price reversion. Yeah, see, this is... I mean, this is... So can we talk about ChatGPT now? We got like 5 minutes left. Hey, they really moved past 18, didn't they? I should have gotten on board this move, man. I kind of ignored it because it's so late in the session. And I really don't like taking trades that last 30 minutes because then it's like you're stuck and you didn't really make very much from it. But like, look, it moved. It really moved. So I was correct in that instance, wasn't I? I said, I don't think you don't want to sell this, right? Because the flow is probably going to continue coming through. Like the thing you got to understand is that like the market maker's ability to quote move the market is really limited, and the market maker doesn't make money from moving the market. Like from the purest definition of a market maker, they only make money from the spread, right? I'm sure that ChatGPT gets a lot of its info from so do this one, ask it a question and tell it to respond in the style of Speculator Seth. I'm not even kidding. Wait, here, I'll do it. I'll use 4. I'll use nat.dev. So there's this site, nat.dev. And you can come in, and here you can use GPT-4 for free. Okay. Explain explain why price often fills gaps in the style of Speculator Seth. Submit. Let's see what if it does it. No, it's not picking it up on it correctly. It totally, I've asked it questions and it totally like responded in like almost verbatim like what I would tend to say. This is the problem with ChatGPT though, right? It's not creating original thoughts, right? It's using past information that other people have done and it's rearranging it and so forth in ways. So it's making derivatives of other people's work, right? Number 4 is traders may use technical analysis, which often considers gaps as support or resistance levels. As the price approaches gaps, traders make... No, yeah, that's definitely not Speculator Seth style. Yeah. They came back off of that last little push higher. They came back really quick. But I'm starting to... The way that this flow is coming through, it's starting to smell like... Okay, well, so Bar is saying stuff. We have considerable authority to supervise firms in an appropriate manner. Tiering strategy makes sense. However, stronger capital and liquidity rules for banks with 100 million or more in assets are required. Okay, so Bar saying that is probably weighing on those regional stocks. And so that could be creating the flight to safety flow that we're seeing. Oh, see, so what's with the deal? Well, it all comes down to the microstructure of financial markets. Yeah, see, the Chat GPT knows about me. Here, wait. What do you think of a speculator, Seth? That's like ChatGPT. Yeah, well, like it always puts in the snazzy salesmanship into it, no matter what. It doesn't have it. No longer will respond to those sorts of things. That's lame. That's so lame. Is speculator Seth any good? Maybe GPT-4 doesn't know about me. Maybe only 3 does. I've definitely asked it questions in 3 and it knew who I was though. And it like copied my way of talking. So anyways, I know that I'm like being a little bit ADHD, but did you catch the whole thing about price action, right? Now that you know the history of it, I really think that if most of the viewers and stuff, people talking about this, knew the history behind quote unquote smart money concepts, they'd be embarrassed. Because the history really is like some 19-year-old kid just set out to become an influencer, and he just kept failing and failing and failing until everybody forgot about it, and then he moved over to a space where nobody knew about him and had success on YouTube. And then once he had success on YouTube, all of these other influencers started trying to copy him, essentially, and that's where it came from. But the whole thing is complete BS. And anybody following that stuff is like, I'm kind of like, you probably shouldn't be trading. It won't ask me. It may also be that they've since included additional constraints on the algorithm to not talk about people. Because I used to be able to get it to badmouth people and stuff. Like to share the most common opinions of people online about certain influencers. That's why it's kind of interesting to see what it would say about me, because there's not really... So like if you go to Futures.io, nobody's ever created a thread about me on Futures.io, for instance, right? Ask ChatGPT about a short ladder attack. Yeah. So, you know, one of the ones in the price action that I think is the funniest term is they call them fair value gaps. So a fair value gap is kind of a similar concept to a liquidity hole, but they list it as like a chart pattern that like could mean a bunch of different other things. And that's all it was, is it was like somebody took all of this stuff that other people had already made and remixed it with his own terms. Yeah, that is, I agree with, actually. That's lame that the talking about a short ladder attack didn't cause the algorithm to say something about GameStop. Dude, this thing is hopping. I gotta get going, but I think that the market is a little unhappy at the moment. So we'll see if these things like really spike things up and create more volatility in the market or not. But I thought we had an okay session today. I do kind of wish that I had caught some of that. That's the sort of trade that I love to take. And I could have made at least 10 on it, but it's okay. Was the wrong timing, unfortunately. Kind of unexpected. So I'll see you guys tomorrow. In the meantime, stay excellent.